It's official. President Trump has signed orders for the tariffs. We're providing you with the stock watch list you need. It's no longer just a headline. It's official. President Trump has signed orders for the tariffs. These new measures, which take effect at 12:01 a.m. on Tuesday, February 4th, impose a 25% tariff on imports from Canada and Mexico and a 10% tariff on goods from China, impacting key industries like automotive, energy, retail, and e-commerce. In this video, we're providing you with the stock watch list you need, covering the most important tickers that are likely to move due to these tariffs. Section 1. Automotive stocks. The auto industry is directly in the crosshairs. U.S. automakers import key components from Canada and Mexico, and these tariffs will increase costs. The industry is warning that production disruptions and higher vehicle prices will follow. General Motors, Ford, Stellantis, Toyota, Volkswagen, BMW, and Honda. Electric vehicle makers like Lucid Motors and Rivian also face increased costs on imported components. And the former Canadian Finance Minister, Chrystia Freeland, a candidate to succeed Justin Trudeau as Prime Minister, suggested hitting Trump ally Elon Musk directly by applying a 100% tariff on Tesla electric vehicles. To complete the list, you should consider Aptiv, American Axle, and Autoliv, which are auto parts suppliers that rely on global supply chains. These companies rely on Mexico and Canada for parts and assembly. Higher tariffs mean increased costs, potential supply disruptions, and pricing pressures. Flavio Volpe, from Canada's Automotive Parts Manufacturers Association, spoke to Bloomberg and did not mince his words. The auto sector is going to shut down within a week. Talk to me next week, and we'll see who's still open, he said. But we don't have to be the ones to tell Trump that. Detroit will. At 25%, absolutely nobody in our business is profitable by a long shot. Suppliers are getting on the phones with their automaker customers to see whether they're going to pay the tariff or whether we're going to shut down. Section 2. Retail and e-commerce stocks. The tariff order also revokes the de minimis exemption, which allowed a long-held tariff exemption for packages worth less than $800 to enter the U.S. tariff-free. And that's a direct hit to online retailers importing goods from China. Alibaba, JD.com, Pinduoduo, which is the owner of Temu, Vipshop, and ZTO Express, a logistics partner for Chinese e-commerce. Why? These companies ship massive volumes of goods to U.S. consumers, according to research from the University of California and Yale University. Just the items from Shein and Temu alone account for 30% of all de minimis shipments. Higher tariffs will increase costs and could impact margins. Section 3. Country ETFs. Tariff-related volatility will impact the Mexican, Canadian, and Chinese markets. These ETFs provide exposure to their respective stock markets, which are likely to react to the tariffs. Another thing to keep in mind is that Chinese-language state media had largely avoided reporting on potential China tariffs, only referencing those for Canada and Mexico. Therefore, this news will come as a surprise to a lot of people over there, especially since mainland China's stock markets remain closed for the Lunar New Year holiday and will reopen until February 5th. Now, as a potential future play, hear me out. China is facing significant domestic challenges, including a property slump and deflation. Meanwhile, the effects of the Chinese government stimulus back in late September have started to fade. The harder the tariffs hit, the more likely Beijing will need to prop up economic support. For this, the annual parliamentary meeting on March 5th will offer guidance on the Chinese government's policy direction. Mark it on your calendar. And we should also add South Korea. Why? Mexico is a big production base for South Korean companies Samsung and LG, especially for home appliances like TVs and fridges, which are assembled in Mexico before being exported to the US. Additionally, South Korea has made heavy investments in the Canadian EV battery sector, and considering how the Korea Composite Stock Price Index has outperformed during January, rising almost 5%, a pullback seems imminent. Section 4. Energy stocks. While Trump's tariffs enact a lower 10% tariff on energy imports, costs will still rise, and Canada is a major energy supplier to the US. Keep an eye on Suncor Energy, which is Canada's largest energy producer. And to keep your finger on the pulse, you should know that for electricity and gas flows, the Pacific Northwest and Northeast US are deeply reliant on supplies from Canada. Meanwhile, increasing the cost of crude inputs will punch Midwestern refineries because they don't really have near-term options available to substitute Canada as their leading supplier. It's not as simple as switching to domestic supply. Why? Because those American refineries are structured for heavy Canadian crude and not the lighter, lower sulfur US oil. That's why tariffs will raise fuel costs, so you might want to add transportation industries to the list if the tariffs go on for several weeks. Section 5. Major U.S. retailers. Large U.S. retailers could also see stock movements as tariffs raise costs on imported goods. Why? These companies rely heavily on global supply chains and will likely face pricing pressures and supply disruptions. Dollar General, Dollar Tree, Target, Walmart, and Amazon are companies to watch since they source large amounts of inventory from China, Mexico, and Canada. Now, considering the market will likely see increased volatility, you should keep an eye on the Chicago Board Options Exchange's CBOE Volatility Index. These tariffs are likely to spark retaliatory measures from the affected nations, leading to further economic shifts and market volatility. The situation is fluid and could escalate quickly, impacting even more sectors. Make sure to subscribe and stay tuned for our future updates as we track how this develops. And go watch our suggested video to discover the 2025 stock market outlook, interpret January market trends, and uncover what smart money sees that regular traders often miss. Don't let hidden risks catch you off guard.